right. Is my mic on? Am I on?
This one works.
Yep, I'm on. All right. Hello, everyone. Thank you for joining us today. I'm Laila Maidan from Business Insider. I cover investing strategy in new and traditional markets, which is exactly what we're going to be talking about today, specifically bridging the world of traditional financial infrastructure using NFTs. First, I'm going to ask our speakers here to introduce themselves.
Sure. I'll kick it off. So my name is Patrick Mullin. You can call me JP. I'm one of the co-founders of Soma Finance. I'm happy to be here today. Soma Finance is one of the first, compliant, regulatory compliant DeFi platforms in the United States. And what that means is we're essentially creating various DeFi products such as an AMM, launchpad and issuance platform, lending products, et cetera, but doing it adhering to KYC, AML, and securities compliance because of the licensing we have via the traditional brokerage business that we own based out of New York City. So looking forward to share a little bit more about what we're doing both in the, DeFi space as well as the NFT space.
Great. Thank you, Lita, for inviting. Hi, everybody. My name is Tony Chan. I'm the co-founder of Pledge. We are the leading marketplace for financial NFTs. Basically, we convert all the Bitcoin loans into financial NFTs where we can trade on our marketplace.
So I want to start off, I like to simplify things by, let's define what this headline is about. What does it mean to bridge traditional financial infrastructure in NFTs? How does that work? Are we talking about NFTs being the underlying bridge or traditional finance regulating NFTs? Which one comes first?
I mean, you were just talking about it, so you want to start?
Yeah, I can start. So what we see is we see the financial infrastructure is, we have a lot of existing bonds and all these trading. I'm a real estate broker before, so I do a lot of loans with mortgages, basically using real estate as collateral. And if you've done any, if you have bought any house or do any refinance before, you realize bank would do out the loans and then they will sell the loans immediately to the investors. There's a secondary bond market. The bank would take all these money back and originate more loans. And we see all these things can be done with financial NFTs. Basically, we convert all the loans, all the bonds into financial NFT where we can trade it. We see this new infrastructure will be more inclusive. This can anybody can try to do this loan on the Metaverse just through our smart contract. So I think we're using this to replicate the traditional financial infrastructure into the DeFi world.
Tony, I want to jump in really quick here before we jump over to John. Does this mean that I can buy, as an investor, like a bond, people's loans?
Exactly. So what we see right now in Wall Street, most of the bonds are traded by professionals in the Wall Street, and we want to democratize it, meaning that anybody should be able to trade and buy all these bonds, like everybody, like people doing in Wall Street. This can open up for everybody. So people can speculate on the interest rate. They can buy bonds, hold it for long term, and there will be like interest rate, so bond value will go up and down, and people will be able to benefit from it. Yeah, if they bet on it, if they bet it right.
Very cool, very cool. John, what does it mean for you?
Yeah, sure. So I think for me, it's really just kind of about abstracting this all back and taking a step back a little bit and really focusing on what does traditional financial services do. It extends credit. It allows for investment products. It allows for savings accounts. It safeguards capital. It helps fund and create new business ideas. So when you take that into the sense of, or the context of NFTs, you're talking about, utilizing blockchain technology to issue these non-fungible tokens to then do exactly the same thing. So with Tony, you're packaging, loans, and you're lending them out to people who want to either receive credit or extend credit, right? In the terms of investment access, one of the things that we're doing is we're helping with the compliant issuance of NFTs to retail investors. So you could be considered as a investment product. You also, of course, need the kind of secondary market trading infrastructure. So like taking the NASDAQ or the NYSE, but putting it into the context of an NFT exchange, right? So these are where I see we're moving towards, and obviously these are all enabled by blockchain.
So I've been very familiar with NFTs as just generative art and all of that stuff, and it's kind of maybe easy to buy and sell this stuff on things like OpenSea. Now we're talking about financial systems, and we're talking about regulation and regulatory territory, which is, this is going to get into the weeds, and it's a bit up in the air right now. What do you think this is going to mean for the regulatory side of NFTs? What do you think that's going to look like? And, are NFTs going to be regulated after crypto at the same time? Is what applies to the crypto space going to apply to these types of NFTs? Let's talk about that a bit.
Sure. I think I'll take the first stab, just because obviously Soma Finance is a federally regulated institution via our broker-dealer Tritorian Capital. So essentially, we're quite familiar with the SEC and how FINRA, which is the broker-dealer regulator, work. And we see that regulation, particularly in the United States, it's here, it's imminent, it's coming. We need to make sure that the regulation as a whole is not too heavy-handed, I would say. So that's a very important piece to just consider. For us, we see just anything tokenized or anything on a blockchain protocol or distributed ledger as just any sort of type of tokenized asset, whether it's an NFT, a crypto token, a security token, tokenized REIT, tokenized bond, whatever. It's the same thing in the eyes of the SEC when it comes to tokenizing things, but you have to divide them into various different asset classes within that. So Bitcoin, for example, is not seen as a crypto security. It's seen as a cryptocurrency. Stable coins, for example, could be seen more as commodities or cash assets. Well, some of them at least. Other ones may not be considered as that just because they're not necessarily acting like that. They're acting like money markets, which could be construed as securities. Tether is an example of that, USDT. So that's a big thing in the US right now about how stable coins are going to be regulated, and you're starting with the USDTs, the USDCs of the world, but then you're going to move down into the DeFi protocols, and I think after that you're going to get into NFTs. And we already see this happening. We see stablecoin issuers in the United States being subpoenaed, and the rules changing around that. You see DeFi players getting subpoenaed. I was at the Masari Mainnet conference in September of last year when there was several DeFi founders who were literally served subpoenas at the conference. So you can imagine that this is coming. With the new executive order under the Biden administration, they've called for kind of comprehensive and collective cooperation between different regulatory bodies, SEC, CFTC, et cetera, et cetera. So it's on the way.
Yeah, I completely agree with John. We see regulation is coming. For Pledge, basically we are a simple DeFi protocol. We just write the smart contract, so we don't deal with any fiat currency. We don't have any licenses. It's just a software protocol. How I put it is we are more like a lawyer writing the smart contract, writing the contract where we can let Leah or John and do the transaction. I'm just a lawyer providing the smart contract for you guys to do the transaction. So right now, we are not aware of any regulation coming to require us to do the KYC and AML verification for all the customer, but we do aware that is coming, so we actively talk to our lawyer. We have a framework as our law firm to represent us to do everything fully compliant. Also, we have Mr. Brian Brooks as our advisor, actively talking to people in Washington to actively come up with the right regulations to regulate our space.
You can also work with us.
Look forward.
So traditional markets, when you're, U.S. investor or whichever country you're in, you have access to some stocks, for example, some bonds. But the digital asset space kind of removes the barriers and opens that up. What is that going to look like if we are using NFTs to sort of regulate these traditional markets? Is there a way to have barriers, or can anyone from anywhere invest in, any asset class and any bond in any country?
Yeah, you want to do that?
I'll take a first crack, no worries. It's a very good question. So maybe I can just even take a step back and explain kind of how we see things and how we've set up our infrastructure for our kind of KYC AML compliance portion of our DeFi protocol. So essentially what we've created is a walled garden around the protocol itself, and that means that everyone on the way in has to KYC, AML, and get KYC is Know Your Customer, AML is anti-money laundering. So we do wallet screenings, we do background checks. We get your identifying information to make sure that you're not, well, first, that you are who you say you are, and second, that if you're a bad guy, you're not coming on to the platform. Bad guy meaning like a terrorist organization or a narco trafficker or something like this, an illicit organization. So once you've been onboarded, we try to make this process as smooth and simple as possible. We literally have a checking system that's like a stoplight. So red, green, yellow, and black. Green means go, you're good to go. Our compliance officer, who's a FINRA Series 24 compliance officer, federally regulated compliance officer, will manually say yes, no, maybe so. Yellow means, okay, we check him a little bit more. Red means, probably not a good guy. Black means call the authorities. This is not the person we want to have on the platform. Based off of that information, then we also know where you're from, if you're accredited or not, if you're American, if you're Korean, if you're Chinese, if you're whatever. And then we're able to, on quite literally the smart contract level, then allow you to access the various products. So that means that the way that we do things is we have different products which are for institutional investors, different products which are for retail investors, different products which could cover all segments of investor classes. So depending on what you come in as, then you can literally work and engage and transact with these various smart contracts on the protocol. If you're not enabled to do that because of your accreditation status, for example, you will just simply get a failed transaction. And you will access the platform via a kind of a Web3 decentralized method. So you use MetaMask, Ledger, whatever kind of Web3 decentralized wallet that you have of choice. And that way, again, it's a non-custodial platform. We don't hold customer funds in custody, but you're able to then trade permissionlessly, trade in a peer-to-peer way. You're able to invest in different products and assets on the platform. You're able to borrow and lend against them. You're able to do all these different things. But we've literally programmed it down to the smart contract level so that just because the UI says you can't do it doesn't mean that you can't go to the Ethereum smart contract that we've built and interact with it. Because if you're smart enough, most people who are the hackers, the bad guys, they're not going to the UI. They're doing it literally at the smart contract level. So you need to plan for that. So that's kind of how we see it, and that allows us to then be able to say, okay, depending on where you're from, you can do this, this, and that. And because it's crypto, because it's blockchain, you need to go down to the smart contract level, literally, if you're going to try to provide an environment that safeguards, various people from accessing various things.
I guess that means because I'm from New York, I'm going to be very limited on what I can do.
Not once we get the BIT license.
Let's see what happens there. I want to ask, each of you is on a different platform, a different blockchain, is that correct? What blockchain is this all operating on, and is it one or various blockchains?
But before that, I want to answer the previous question Lilia has. I think this is great for everybody, where everybody is on a level playing field, where everyone will be able to buy Bitcoin. I'm a real estate broker before. I dealt with a lot of high net worth individuals. I got in Bitcoin in 2017 when it was about $4,000. We see there's a lot of regulation in the US where a lot of the investment product, they are only offered to accredited investor only. And to me personally, this is not fair. I think everybody should have the right to invest in the right product. And look at Bitcoin. You don't have to be an accredited investor. You don't have to register yourself. I don't care you're a rich person or you're a poor person. It doesn't matter how much you have. Everybody can buy Bitcoin at the same price. There's no dealer in the middle taking cuts from you. There's no wealth management company that will mark up the price or get some commission out of Bitcoin. Everybody are on the level playing field to buy Bitcoin. And I think this is very meaningful, and I think this is truly a great investment product for everybody. So I see Bitcoin is just one example. Ethereum, NFT, later on, we see this is a new asset class where a lot of high net worth and individual and everybody should have some exposure in. So this is great. So, and this can change the way how we invest in the future. That's one thing.
That is awesome. Thank you for making that point. I think that is what the biggest use case for all of these digital assets has created, is it's lowered the barrier for everyone to get involved and start to get educated about financial education. Before, that was very limited. I think you could walk into a bank not too long ago and say, I want to invest in stocks, and they probably say, you got to have a minimum of like $25,000 in the bank. And there's a big percentage of people that live paycheck to paycheck, and they just can never get ahead to to go into the world of investing. So that's a great point that you make.
Right, and they can buy Bitcoin. They can buy any of these tokens. Like even with 10 cents, $5, you can buy Bitcoin. You can invest in
Unless the
Bitcoin
ETH
with
gas fees are too much.
$1, right? So I think it's meaningful, yeah.
And I say that in jest to answer the second part of your question, which was what chain are you building on? We are building on Ethereum to start. I love Ethereum and just generally the kind of whole ecosystem surrounding it. But that being said, I'm also blockchain agnostic, and I'm a big supporter of many different other layer 1s, layer 2 protocols out there. Love Terra, big Matic supporter. We run one of the largest nodes on Matic as well as on Terra. But that being said, back to the question, we are building currently on Ethereum because that is the chain and protocol that the SEC is the most familiar and comfortable with. That, and then I think after that, EVM compatible protocols are probably next. But realistically speaking, these guys are bureaucrats and regulators. They're not technologists. And there's so much innovation happening in the space, and you have new layer 1 protocols, layer 2 protocols launching every day. It's hard to keep up. And for us, in order to go to market as quickly as possible, we'll launch on Ethereum and then quickly move to other lower cost scalable options, including a chain we're developing ourselves actually, which is a Cosmos Tendermint framework chain.
Great. Yeah, for us, we start out with the BNB chain. I'm a Chinese guy, and CC is a Chinese. A lot of the top executives are Chinese and in Binance, and actually they asked us to work on this project initially last year. So thanks to them, we got over 60,000 Telegram members. We have over 60,000 Twitter followers, and that's how we build our initial community, thanks to all the Binance support. Also, we picked Binance not just because of CC, because it's low gas fee and it's much faster and cheaper than Ethereum. I see Ethereum is great. I've been buying Ethereum since 2017. I bought some at, I think, $100 couple years ago. But I see Ethereum is more for people like the very rich John, who can afford to pay like $200 for gas fee.
Yeah, ETH2's coming. The Verge is coming.
Is it though? I'm waiting.
I can't speak for the Ethereum Foundation.
Yeah, for BNB is
hopefully
like,
soon.
Yeah, each transaction is like less than $1. I think it's much better for people to try it out, and we have a new product. We don't know this works or not, but to do startup is to try to spend as little money as possible and shortest amount of time and get feedback. So we're trying on the BNB chain first. Yeah. So.
Tony being early to every crypto investment, by the time this is done, I'm going to have a look into what's in Tony's investment portfolio in terms of crypto.
I don't do investment. I'm very busy running this Pledge.finance, so I just hold some token like Bitcoin, Ethereum, Uniswap, and I think ENS, that's it. Yeah.
There you go, guys. That's what's in his portfolio.
Yeah, I just keep buying. I don't sell. I don't trade. No time to trade. Yeah, just acquiring assets, just like real estate. I'm a real estate guy, so just buying.
So I have to ask the big question now, because when we talk about digital assets, there's a lot of volatility. And one of the reasons why is because institutional investors haven't fully come into the sector yet. But we believe that as institutional investors come in, that volatility will somewhat level out. What do you think it's going to mean, like once the NFT sector is regulated and it's maybe the underlying infrastructure for traditional markets? What is that going to look like for institutional investors, and how is their entering the market going to shift this space?
Yeah, I mean, I think it's a very good question, and I think from a retail perspective, it's going to look different than from the broader kind of financial industry's perspective. If you look at a retail perspective, it's just going to bring a lot more money into the broader space. That being said, it's not like they're going to be buying pudgy penguins or something like that, or these type of PFP projects. They're going to be investing in probably financial NFTs or things of this nature, which the average person in this room is probably not getting tons and tons of exposure to, or even the reason why they're at this conference, to be completely honest. So from that perspective, it won't be like groundbreaking at first for a lot of people here maybe in the retail sector, but in general, I think institutional involvement will just bring amounts of capital to just the broader crypto, Web3, and kind of NFT space that honestly for most people is unfathomable. And realistically, we know that they're looking for at least to a degree, AML and AML compliant options. Of course, they want to make sure that they're not doing anything illegal. We talked about it off stage, the example of Pepsi. PepsiCo dropped an NFT, and it started reselling for, I think, like 100 times the initial mint price. And they literally just had to pull the project because the legal counsel was not comfortable that this Pepsi NFT had sold for, 100x the price, which, is going to bring a lot of eyes, right? The rug pulls, the scams, like these types of things are obviously, rife in the space, and they're not a good look for us. So institutional involvement will also, ideally kind of weed out some of that stuff, just because there's higher burdens of compliance and requirements for what these guys are looking at investing in and participating in. But again, from a retail perspective in the near term, I think it's just about more money coming in, more venture capital funds are going to be able to raise significant fund sizes and then deploy capital into various NFT projects, into other DeFi innovations. So that in general is just a very good kind of direction for the space in general.
Do we see massive investment banks on Wall Street selling product through NFTs? Is that where the future is going?
Yeah, I see a lot of traditional money is coming in, institution, family offices. We dealt with a lot of private investor. But before I go further, I need to go back. I mentioned some token per my legal counsel advice. Whenever I'm on talks, I need to say these are not my financial advice. Not financial advice. Especially we are on recording, so yeah, I don't need to be.
I'm not shilling pudgy penguins.
So,
I
yeah,
promise.
Yeah. So if you lose money, don't blame on me. So basically that's it. But going back to Lilia's question, that's a great question. We see a lot of banks. We're talking to banks right now. Actually, we have an MOU signed with one of the U.S. regulated bank. They have $60 billion in deposit. At any given day, they have 200 to 300 million in their checking account, and they need to get some active interest payment. As we all know it, we put money in the bank, we get less than 1%. And if we loan it out on our platform, you get 3 to 5%. So it's definitely better than 1%. So they are very excited for the bank. Also, a charter regulated bank, they're very interested in getting into working with us because they see this is coming. They see this is a new financial platform, and they want to come up with a new wealth management product that is crypto native to attract the new and the younger customer. All we are here are in the leading edge of technology, and we like banks all want you all be part of the customer base. Yeah.
Can I just quickly add something additional? I think all Tony's examples are really great. Just one additional one I think is quite relevant is the use case of kind of identity NFTs, so KYC NFTs. One thing that we're going to be doing on our platform is basically creating NFTs for the various users who then can have all of their identifying information stored safely in the metadata of an NFT that they create, that we create for them essentially, that then they're able to passport to other different financial institutions. So that means that you don't have to always, re-enter all of your information. You can just send them this NFT. They can take and abstract the information that they need, and then you can immediately get on to, maybe your brokerage account or your whatever other exchange platform that you have to KYC on, which is obviously going to save people a lot of time, take away a lot of the hassle of doing this kind of KYC process. And realistically, if you're talking about financial institutions, this could be a big thing for them too, because they literally are doing this by hand, on paper. It literally can take a month to sign up for a bank account in certain places. Like, that's ridiculous. It should be, as quickly as showing them, sending your NFT, and then they can see, the various identifying information behind the person. So I think that'll be a super cool use case for financial institutions for NFTs.
So very quick, I want to know, if we have any really pressing questions from the audience before we wrap up, and I'll just look to see if there's any hand that goes up immediately. We'll take it. And I see someone in the back. Yes, please. I don't know if you have a mic or a way that we can, I guess,
Scream.
Just yell as loud as you can.
I will. I'll project. As it relates specifically to identity, have you guys explored at all decentralized identifiers and how these can be carried on the blockchain, or more self
I mean, yes, we have been looking into it.
You have 2 minutes for this.
Yes, we have been looking into it. I think it's an interesting use case, just like you mentioned. I think the tricky thing with this particular use case is just depending on which country you're coming from. Like the EU has various different privacy laws, particularly when it relates to kind of forgetting information and things of this nature under MiFID II. That's, you know, changing how identity and privacy needs to be kind of upheld. So it's not like a one-size-fits-all, and I think where we would probably start is, again, because our focus is the U.S. market, we'd probably focus particularly on the U.S. first, and using the U.S. as the kind of the benchmark that then we can, you know, expand internationally. Within the U.S., we're just basically saying, like, listen, we're a federally regulated institution. We have federal officers, or regulated compliance officers, who are able to then give a yes, no, maybe so to these individuals who can verify this information at a different level than most parties. So like as an example, some of these kind of KYC platforms like a Jumio or an Unfido or whatever, just because you have passed their check does not mean that is legitimate in the eyes of the SEC.
Really quick, go ahead.
Yeah. Now, can you Tony, can you comment a bit more about, like, you know, your business model? How is it differentiated from like companies such as Compound, which is a huge success?
Yeah, great question. Yeah, Chuck is my investor, one of the largest. So thank you for the question. So have you anybody heard of Bitcoin? Raise your hand. Everybody, right? Anybody heard of Compound? Raise your hand.
Almost everybody.
Compound? Okay, great. So for right now in the current marketplace for DeFi projects, Compound and Aave, they do variable rate loans. So the borrower can return the money anytime, and the rates fluctuate. The lender, once the borrower returns the loan, lender will not be able to get any interest payment. For Pledge, we came up with a unique product where borrower will not be able to return the loans. So the interest rate and the return is guaranteed to the lender. So looking back in the real estate world, I'm sure we all rent apartment before or after we graduate from college, right? So when we rent an apartment from college, we have two options. We can either pay a month-to-month rent, or we can sign a long-term one-year lease. So in the current marketplace, there's only month-to-month lease. And we are the only company that provide a longer-term fixed rate lease, a longer-term one-year fixed lease for people.
So folks, we're about to get snatched off the stage. So we're going to thank you for joining us today, and stick around for the next panel, I guess. I don't know. Thank you.
We can talk.
Thank you so much.
Thanks. Thank you.